Good day, ladies and gentlemen. Welcome back to this page. Today I'll be showing you guys one of my favorite pairs to trade. I'll be showing you guys how I set up my trades, whether it be swing trading or whether it be price action trading. But today I'll be showing you just how I draw up my zones and how I make use of those zones. I don't draw up many levels, but I do make use of support and resistance within relevance of price. But before I get into that, I just want to talk to you guys about funded accounts and firms, trading firms. I highly suggest if you guys want to build a career out of trading for yourselves, I suggest you guys start looking at a couple of firms. They offer good deals, on especially when it comes to profit split. And I will also be getting into one of the trading firms, and I'll be sharing more information about that on a later stage when I'm actually trading for a firm. So let's just get into the video. Today I'm on Nasdaq, one of my favorite pairs. I look at forex pairs such as USTECH, Nasdaq, and I also look at gold. Those are my three favorite pairs to look at. And the rest of the currency pairs, I do look at them, but I don't really trade them. I don't make that big a deal of trading currency pairs. I swing trade currency pairs because to me it's a long-term investment, so you can risk a little, and you can let a trade run out for a month. It depends on you as a trader, So let's just get into the video. So today I'm on the monthly on Nasdaq. So I'm here because the way I look at the pairs, or the way I start drawing up my zones, I'm kind of testing something new right here. I've been using it for a couple of weeks, and it's been working in my favor, So what I do is I look for a giant, like a huge as I'm supposed to be using that language, but I look for like a giant red candle, and simultaneously I look also for a giant green candle. So I would draw my zone from the top of the red candle where price actually found resistance, and I look at another candle which is a green candle for support, and I use that two areas, and I use those two candles and I create like an area. So I'll show you. So what I'm looking at is this red candle, which is right here, this big red candle right here. That will be my area of resistance that has become support. And then I'll also be looking for an area which is a green candle, which was support that became resistance. So what I do is I grab my horizontal line, and I go to this big red candle, this one here, and I put a horizontal line there, and I grab another one, and I go to the bottom of a green candle. I was going to use this one, but I feel like I don't want to make my zone too big, so I'll probably just use this one. So as you can see, I've created a zone that was support here and resistance here, and price broke above this area, pulled back into this area, and now we can see that price has shown some rejection, and price is also kind of indecision. That's on a monthly now. So after I draw up my two horizontal lines, I get a rectangle, and with the two horizontal lines I create a little zone, and within that zone I have a rectangle that will give me an area, so right there, that will be my first area. As you can see that if you do go on a lower time frame, which I will be going on, I'm just drawing up my zones based off structure and support and resistance levels. And as you can see, if you look here as well, we have a red candle, and I will use that candle to create a zone, and we have use that top of the green candle. As you can see, this price broke above this area, came back, it just fell. But as you can see, price is here again, which showed signs of price rejecting this area. So we have like a higher high, because this was a low right here. We broke above that area on the left, so price is now at an area where it was resistance in the past, and I'm thinking since these are reciprocals of one another, price will most likely use this area for support now. So this is how I set up my zones. Not always on the monthly, it depends on which pair. You have to make sure that you understand the pair and how the pair moves, and like what's the best way to analyze this pair. For me, I feel like this is the best way for me to analyze a pair. So as you can see, that I've got two zones, and once we go through weekly, I've got structure, you know, as you can see, I've got structure, I've got price making a higher high, and I also got this double bottom right here at this area. So a double bottom is a reversal candlestick pattern, and these patterns form at areas of support. These double bottom patterns, candlestick patterns, they form at areas of support, major areas of support, and they are reversal candlestick patterns. So you can see that price has formed a double bottom on the weekly right here, and then also after that has formed a double bottom, I have a look at price at another candlestick, which is a hammer. So that will be my confirmation to press the buy button. So as you can see, we have a hammer candle right next to it right there. And as you can see, we have a double bottom, which is valid. We have the first bottom, the neckline, and then we have the second bottom. And as you can see, we have indecision here with this candle. But then we have a huge rejection forming this hammer candle. So as you can see, even if you draw a trend line, as you can see, price has been moving between my trend line, and also this chart pattern that is formed is a bullish flag. So bullish flag chart pattern is a temporary pullback in price, which price forms to create structure. So once price breaks out of this trend line, you can also have an entry. So as you can see, these are just confluences, you know, around my two areas that I've built so far. And if you go even on a lower time frame, so this is for people that want to swing trade, you know. If you want to go on the lower time frame, you go to the daily. That's a whole different story. As you can see, on the daily, we have another double bottom, you know. So if you wanted an early entry, like a very early entry based off a higher time frame move, as you can see, we have another double bottom over here, which was a fake out, you know. So it was a fake out. So you would have sold because of this. I'm not saying all of you guys, but as you can see, that this was another double bottom. The neckline, price closed above it, so price needs to come and retest this neckline right here on the left. So that's why I'm saying price needs to probably come and retest this area again for support, and from there to move all the way up. As you can see, price broke above this and created a high. Price needs to create a low right here, high, low, and then price will, according to structure, will create something like this. So this is what I'm thinking and I'm anticipating if price plays out. So this is what we had. We had this double bottom. We had price break above the neckline. So price needs to come back to retest this area, which is normally a neckline, and then price creates another high, which will push price back into this area, and price will come back and retest an area that was created for support and resistance in the past, as you can see, and then price will break above this level. And according to the monthly structure, price needs to make a higher high, so there will be more buys coming in the coming month into the next month. So that's what I think will be happening on Nasdaq. And as you can see that, let me just remove this, don't want to confuse you guys. As you can see that if you were planning to swing trade Nasdaq, you could have an entry on the weekly, you know, and let it play out for the whole month. Or you can still swing trade this pair based on an early entry. Sorry about that. You could still base this entry on a lower time frame based off this double bottom right here, which was created on the daily. So let me just remove that. But if you are still not satisfied, you can also pop down to the 4 hour. And if you look left, we have this inverse head and shoulders, and the inverse head and shoulders is a reversal candlestick pattern. So as you can see that when price created this inverse head and shoulders right here, we had price come back and retest this area for support, and as you can see, price started moving away. And on the 4 hour, we can see we have a trend that price is creating higher highs and higher lows. So this was the high, this was the low, that was the high, this was the low. So either price finds support between the high of this current structure on the left, or the higher low price created. So price might be coming back into this area for support, and you can have a short sell right here if you want to. If you don't want to and you want to wait for price to get here and then go for the bigger move, that's okay as well. So as you can see that if you do go on the 1 hour, we can see that price has made a low, a high, and price most probably will come down to make another low. As you can see, we also have a double top right here on the 1 hour. Those are now, this is now price action trading right here. If you don't want to swing trade. So as you can see that all the things I'm saying is exactly the same, but based off higher time frames and lower time frames, because on a higher time frame you will have a bigger move, which will, when I say bigger move, I'm regarding pips now, moving pips. And when I'm talking about the lower time frame, there will be less pip movement in a certain direction before price actually reverses or changes direction. So you could have gone short. So price closed below the neckline. Price retested the neckline, as you can see, and okay, you could go short like that, because price made a low, a lower high, price needs to make another low, just because price needs to come and test this area, because it hasn't yet. If you go on the higher time frame, such as the daily, you can see that price needs to come and retest this neckline of the double bottom. And when you put all those confluences together, it makes a lot of sense, and if you look at the fibs, if I have to draw a fib, this would be the 50% area where price broke above and pulled back and will most likely find support. So let me just get out my fibs. And remember guys, when you draw a Fibonacci, when you draw your Fibonacci, it has to be one move. You have to make it has to be one direct move, So when you draw your fibs, it has to be one move. So this is my one move. And as you can see, this is the 50% area, like I said. This is the 50% area that price will use to find either support. Well, support, because this is one of my golden levels on the Fibonacci. Let me just remove this trend lines because it's too much on my chart right now. But as you can see that this is the 50% level, which is a golden level on the Fibonacci. And if you want to use the fibs, you can. As you can see that I said that this was the 50% level, and you can use the 50% level as an area of support or resistance, or vice versa, which way it depends on which way the direction of the market is going. And as you can see, I'm confident that price will pull back into this area here, this green area. Price needs to just come and touch this area, because what I've noticed about double bottoms and double tops, when price breaks the neckline, price and moves away, then price, not always, but it tends to come and retest that area which it broke out of, so that is the 50% area that you can use as well. But I don't really like using the fibs, but I just use it for a confluence. As you can see that it's another confluence. But that's it on Nasdaq. I'll probably make another video on USTECH explaining the way I set up USTECH and gold as well. So peace.